Mm. What's up, guys? It's Rick Ginn here with Flip with Rick. And you know what today is? It's Friday evening and I'm solo. So those of you that are new to this channel, my name's Rick Ginn, AKA Dad. I am the Flip with the Rick. I'm the Rick in there. And my son is Zach. And you guys see a little bit more of Zach. He's got a lot of energy. He's fun to be around. And that's why we're work together on this. So if you guys are brand new to the channel, I have some good news for you. Is there's nothing for sale here. Like everything I'm going to do is share my 20 years experience of doing real estate, specifically wholesaling. And I share with tips with you. So if you're new to this channel, do me a favor, hit that subscribe button, smash that like button so you can continue to receive the absolute best information on wholesaling today. Not only do we share all this information for you for free, me and my son run a 7-figure wholesaling business, and I've been doing this 20 years plus. I started my son actually when he was 16, but he went into the business full time at 17, and he hasn't looked back. 5 years have gone by, and it has been a wonderful decision for him. I let him make it on his own, and you guys know what my decision was at 33. I decided I was making a massive change. So today we are talking about the current real estate market and the looming crash. And I'm going to share the details of a guy who's been deep. Oh my God, have I been deep through a crash? I know exactly what to do. Now, I'm going to tell you where we came from, where we are today, and where I think we're going. Full disclosure, I don't know everything. Anybody who tells you they know everything, they're completely lying to you. I'm just going to give you my take of where I think it's going to go, and we'll have to make adjustments as we go on. So if you guys are new to the channel, go ahead and put in the comments. Let me know what market you're from. You guys can work together. Make sure you vet the person if you want to decide to do business with them. Everybody here has a like-minded goal, is they want to get free. They want to get financially free, and they want a lot more time for their family. So if that's of interest to you, you're in the right place. If you guys, what we'll do is take probably the first 20, maybe 30 minutes, and I'm going to go over my market data, which is, I really haven't shared this publicly with a lot of people. I've talked to a lot of you, and I'm going to tell you where I think we're going to be going and how you can take advantage of it. So do me a favor, guys. If you're new to the channel, click that subscribe button. That'll make sure that when we go live, and by the way, we go live, I promise you 4 times a week, we go live, and we want to share this information with you. So hit that subscribe button. If you guys are new to the channel, go ahead and put in the comments. At the end of our teaching session, I try to go through and I answer as many questions as I humanly possibly can. But listen, before we get started, like some of you guys are brand new. You're like, what the heck is this wholesaling thing all about? Some of you guys are seasoned pros. You're just trying to like stay connected to the marketplace. That's it. We are in a lonely sport called wholesaling. It's lonely, but it's extremely fulfilling. You've got to have a good time. This week alone, we've taken down 3 deals, which was a really good week for us. Remember, I preach quality. If you can add quantity to it, amazing things happens. But guys, you got to have fun doing this business. If you're not having fun doing wholesaling, do me a favor, get out, okay? Because this is about helping people, and the more problems you can solve, the more money you're going to make. And I think everybody in the wholesaling space that's at least educating on it, we all can agree on that one. And that's probably about it. But that's the beauty of living in America. We all have our own thoughts, and we can act on them accordingly as long as we're not harming others. But guys, get up, man. Get excited. Like, have some like crazy energy. If you've never been to like a Tony Robbins show or anything like that, the man gets you up dancing on the tables, and it's that same excitement if you'll bring to life. You bring the same excitement into wholesaling with your family, with your spouse, with your kids. Amazing things happen in your life. Let me show you what I'm talking about.
Get the fuck out of bed, bitch. Go. Get up, and get the guy go. Time to wake up, bitch, get up.
guys, that's what I'm talking about. So that personifies how me and Zach treat wholesaling. We actually really enjoy it. Is there some stressful times? Yeah, but listen, if you can't have a good time while you're doing something in life, go do something else. So I love wholesaling. If you learn how to do wholesaling the correct way, amazing things, amazing opportunities open up in your life. Um, I'm looking at the comments before I get started here because to me, there's nothing more important than like feedback and talking to you guys. So me and Zach try to answer all the comments on the YouTube channel. You guys know our Facebook group, Wholesaling Houses for Real. If you guys have never been there before, go check us out. We have the largest Facebook group that is active on the internet today, 42,000 and like growing at a monstrous rate. And guys, there is no better way. Actually, I got to fix. Isn't that funny? I left Zach's name on there. So let me fix that. See if I can do that. Oops. Okay. I had Zach and Rick up there, but you guys know my son, Zach. He does 3 lives a week and we join on Thursday. And Thursday, we actually do one-on-one mentoring calls with you. So you want to make sure you're part of our Wholesaling Houses for Real group on Facebook and also join our YouTube Flip with Rick. You can join on Zach Ginn's channel. You can join on Rick Ginn's channel. And you guys are going to notice some nuances that we're going to bring to make it where you guys can find information faster. So Zach has a channel. I'm going to bring back my channel with a lot of old school stuff and some of the spinoffs that I do. And then we have a Wholesaling Houses for Real channel that you can take the Mastermind clips, like the best parts of it, and we're going to make them in like short little stories there. So let's get into it. Let's talk about what we're here to talk about today. I'm actually going to do a little bit of a slideshow. And today we are talking about the real estate market right now in 2022. And I'm going to tell you where we came from, where we are, and where we're going, and most importantly, what you can do to get this going. So if you have a question, go ahead and put in the comments there. When I'm done, I promise you, I take 2 hours. We'll go through the whole thing. I want to help out as many people as possible. So there is no dumb question, only the question you don't ask. So as I said, there's nothing for sale here. If you guys are new here, do me a favor. If you want to learn how to do wholesaling, go to freewholesaling.com. It's a 100% free course. There's no credit card. There's no funnel. All you do is just give us your email in exchange, and I teach you 20 years of everything I know. And you keep tuning back in the channel, and I constantly update you and help you try to solve your problems. So let me go ahead and get all this off here so we can free up our screen, and let's jump into it. So I'm going to jump into a slideshow. I'm a little bit new to the slideshow. So yeah, that's my face. This isn't good. Now, the title of it, reason it says that, it just depends on how you look at the data. So I'm here to tell you in wholesaling, it doesn't matter if the market is completely crashing or it's taking off through the roof, because us as wholesalers, we capitalize on what's going on today at discounted rates. So do I care what happens 2 or 3 years down the road? Yes, I do. But the reality is wholesalers deal with the present time, what's going in the market, and maybe 2 to 3 months down the road. That's where you have to concentrate, because all your sellers are making decisions today. Now, if I'm a landlord, I'm a buy and hold, I'm an Airbnb guy, I have to look 3, 5, 10 years down the road. I'm here to tell you wholesaling, if the market literally dropped 50% tomorrow, go get excited, because amazing things would happen in your life. On the contrary, we've had the market go up almost 28%. And we've all reaped the benefits of that. I'm telling you, in a downward market, you have the same opportunity, if not more. And I'm going to walk you through on how that happens. So without further ado, let's roll through it. Now, I kind of condensed these slides because I don't want to get like in a 2-hour presentation, because I can go on and on about the market. But in this presentation, I'm going to sum it up in 3 simple parts. Okay. How did we get here? Because you got to scratch your head and go, how the heck are we in a market that's appreciating double digit, like high double digits, 20% increases, and there's absolutely nothing available? Well, you all know, but I'm going to sum it up. Then we're going to talk about where we're at right now. Like right now, you guys flipping properties, we are going to go over what you need to take in consideration when you're getting done. And then at the end of this, we're going to go over what the next 12 months really push you into like the next 18 months. And keep in mind, that part is just my prediction. There is no guarantee I'm going to be right, but at least you'll know if this scenario comes up, you'll know exactly what to do. So let's roll in it. How did we get here, guys? I'm not even going to like go over the pandemic. You know how I feel about that. So the pandemic was kind of the thing that tipped the iceberg. When the pandemic started, builders were traditionally, they were at the point where they were winding down anyways, because they felt that real estate was starting to peak. And that was the sentiment back in 2018, 19. So building permits stopped. People stopped building because builders don't want to build at the very end because that's the inventory they get stuck with, and they have to discount it severely to get rid of it. Not only that, in 2018, 19, we still actually had very low inventory rates. Not rates, levels. And to be honest with you, it was still in a seller's market. So a seller's market is when there's not enough inventory to fulfill the current demand. You have a seller's market. When you have a balanced market, it's equal. And then when you have a buyer's market, there's too much inventory for the current market to absorb it. So we've been stuck in a seller's market, well, theoretically, since 2012, 13, definitely 2013 on. So 2012 before was a buyer's market. It switched over. Here we are 10 years fast forward. And so we have record low inventory rates that started out in 2018. And obviously the problems only got worse. I don't even have to go into details on that. And then let's throw it all in. If interest rates weren't low enough when the pandemic hit, the federal government decided to try to save the economy, to knock interest rates down to zero. Yes, zero. You are at a historic low rates of interest rates because of all these items you see on your screen. You have created the perfect monster. And here's the funny part, guys. 20 years ago, I could have never predicted, maybe other than low inventory, any of these other events happening. So I've been in the business 20 years. I never saw it coming. And I want you to learn from this. Wild things happen in real estate. Everybody thinks they happen so perfectly and planned. I'm just telling you, these events happen rapid and fast. The last 2 years, if you've been involved in wholesaling, specifically in real estate, it has been a wild ride. And all logic told me that when the pandemic hit, real estate should pull backwards. Well, the complete opposite happened. And I'm here to tell you on camera, I was wrong. And almost everybody I've seen in the industry has kind of guessed it wrong because we're looking at historical data. But honestly, all these events never have they ever happened simultaneously. So the market is getting mixed feedback on it. So look, guys, let's talk about inflation real quick. Okay. If you don't know anything about inflation, you need to like really learn and understand it. Inflation is just basically a hidden tax created by monetary policies. Who sets these monetary policies? It's all about politics. I'm not getting into politics on it, but the Federal Reserve will move interest rates to try to stimulate or bring or stabilize the economy. Interest rates by the Federal Reserves are set for all the major banks, and that's how all your CDs, the T-bills, and your mortgage rates, bond rates, everything is tied into the Federal Reserve rate. So as the rate goes up, the idea is the rate is to hedge off the inflation, okay? Inflation is completely out of control in the United States. I think it's so much worse than what we think it is. They got it hedged at 7%. We're well over double digits, and we haven't even started like to level it off. If you don't believe me, go by your grocery store, go fill up a tank of gas. All costs have gone through the roof. Let me give you an example. I went and got a haircut yesterday. Okay. My price went up 35%. You think the scissors cost any more? I'm sure some of the products cost more. Maybe the rent's probably going to go up. Guys, this has an effect on I never thought I'd hit the haircut business, but for the first time, I'm paying like really high rates to cut my hair. And like every time I walk in, I went by my mechanic. They get an oil change on the car. I don't have an electric car. I was just in shock at some of the numbers, and and you guys are feeling the same thing. So inflation is really just a hidden tax created by politicians that steer monetary policies. I know the Fed's independent, Rick. Don't worry about it. It's still an appointed position. So we all think our house prices are going up. The reality of the situation is the dollar is dropping so rapidly that your house hasn't gone up 20% in value. It's just that the US dollar, they've printed so much money out there. There's so many people handing it out. It's ridiculous. And you've got to really focus on inflation over the next 12 to 18 months, because are these numbers ever going to get in check? I don't know. Sooner or later, going to do it, but what's the cost going to be? So understanding these inflationary pressures are just the US dollar being diluted. I hope to God it never gets to the point where it's worthless, but that is a possibility. And so when you own assets, they keep going up in value because the dollar gets less and less. And we are in a fundamental shift right now that we have never seen in US history. Everybody refers back to the 70s and 80s when we had inflation, but we've never seen anything like this. So let's talk about the current market. I'm just going to blow through this because you all know it. I'm just going to sum it up for you. Guys, when I talk about a market crash, it is not going to be a systematic wide market crash. It's going to have sectors and they're going to bomb hard when that happens. So number one, okay, right now, inflation's at a 40-year high. It is out of control, guys. And the Fed hasn't even nipped it in the bud, and they've already done one rate increase. And I'm going to explain why that's important to you. We have major supply chain issues that are looming. The problem is we can't get metals in. Container ships have gone up 800% in cost. Stuff's getting caught in tariff wars and just all this stuff winds up in real estate. And that's why real estate's kind of like the pulse of the economy, because you got wood, you got metal, you've got wiring. I mean, you name it, it is in a house. Okay. The next thing is the Fed Reserve rate surging. The current mortgage rate right now is 5%. I actually want to show you guys the chart here. Let me see if I can pull it up. Let's try. So you guys, and I'm talking as today. So if you look at this chart right here, hopefully you guys can see my screen. We just focus on the 30-year, which is going to be the one on the top. And 2016, 18, and remember all the way to 2018 to 19, rates started dropping. People were getting excited. The economy was booming. And then let's fast forward to, let's see, March. So March is when the pandemic hit, and then they really started driving rates down. Look at these rates, guys, 2.99, look at this, 2.78. Honestly, I probably would have bought more property. I'm not a big mortgage guy. I don't mind commercial loans, but it's hard to screw up a mortgage at 2.79%. You can actually buy it at the wrong price and it still will cash flow. And that's what happened in the U.S. economy. People went crazy with this, and they were actually right. And the rates went up a little bit, and then, we have this thing called inflation. So what happens is the Fed usually falls asleep at the wheel when the economy starts to boom, and then they react. So the Fed's always going to be in a reactionary position. They are not being proactive. If they were proactive, we probably could have hedged this problem a long time ago. But it's like when you're steering a car. If you start to go out of the lane and you overcorrect, you're going to get wild shifts. And this is what you're seeing here. So here we are. Now we're in November and towards the 10th of the new year, 4%. Guys, look at this. You're at 4.99 today. The average 30-year fixed mortgage rate. Let me remind you of this. We've only had... let me fix my screen here. Hopefully you guys see me. We've only had one rate increase. So we've only had one rate increase and we were already at 5%. So a lot of you are like, oh my God, 5%. So dude, that's nothing. I've had mortgages at 9, 10, 11%. I've been in the business a long time, but the market is in shock because they're not used to seeing these big numbers. Now, here's the best part of it. You got 7 more coming. And they're all going to be between 25 and 50 basis points. 25 just means it goes up 0.25%. 0.5 means it goes up 0.5%. And the one in June is supposed to be the big spike. There's a 70% probability that they're going to raise it by 50 basis points. Guys, At these current rates and numbers, the question is, how high will these rates go? And it's going to get higher and higher. I'm going to go through what I think the number is going to be. But remember, every 0.25%, every 0.5% makes the buyer's purchasing power smaller and smaller. They can't afford the houses. And guys, we've had such a record price increase. Something's going to give here. Okay. Last but not least, guys, Wall Street. Okay. Wall Street is in the housing business. They're in it heavy because they're looking for assets other than stocks, other than the other ones that we all talk about that are reliable, that people invest to. Wall Street has figured out the single family home market. And guys, they're focusing on good American homes on the medium price range and below. That's all they want. They're not buying the high-end stuff. They're just buying your bread and butter, 3.2s, 2.2s all across America. And it is estimated a third of all single family houses being bought on the market today are bought by Wall Street, which is basically your hedge fund. So never ever saw that coming. I got to be honest with you. I'm going to fully admit to that one. So let's talk about predictions. Okay. And this is the whole key to this video. And you got to understand it. You as an entrepreneur, as a wholesaler, you have to look ahead in the market. You have to look at data. If you're not looking at data every morning when you wake up, you are missing the boat. There's plenty of people want to spoon feed it to you. You guys go straight to the source and get it. So here's where we're going. And I'm talking about 2022 and probably the next 12 to 18 months. Your high-end real estate is going to start to lag. I'm already seeing this. It's not moving. They're sitting longer and longer on the market, and realtors are calling me back on stuff I made offers on in the last year. Okay. The problem is when you have 5 to 6% interest rates and you're talking about $1 million properties, they're much, much, much harder to move. When you're selling them with 2 and 3% mortgages, people don't care. At 5, 6, they're going to pay attention. What are they going to do when it gets to 6 and 7? Okay. So watch your high-end real estate markets. That's going to tell you when the avalanche is starting to get momentum. So an avalanche, something has to break first. So it is always the top of the mountain. So we're talking about the top of the market. And in my 20 years, once you see high-end real estate start to struggle, it's a snowball effect and it works its way down. Let me show you. Okay. That's sign number 1. Sign number 2. Obviously, you guys are looking at mortgage interest rates. You know how to look it up. You can look it up directly online. The second one is watch high-end retail sales, boats, RVs, second and vacation homes. When these things start hitting the market everywhere, that's basically rich people telling you they're concerned and they don't want to take any more risk. Once you start seeing these markets flooded, in the last 3 years, you struggle to find a vacation home, a high-end boat, even a low-end boat, recreational vehicles. Everything's getting a massive premium. And I am already starting to see handwriting on the wall because I'm getting multiple callbacks on stuff I've made offers with. And they're asking if I'd buy it for a deep discount. And I'm sitting on the sideline. I'm waiting till the end of this party. So these two right here, guys, if you'll just watch your high-end real estate and you'll watch your high-end products, any type of asset, actually a liability, but like I find the used boat market one of the best indicators of what's happening. Also, you can look at boat shows. Everybody has a boat show in their town. When they don't offer any incentives at your boat show, you know the market's booming. When they're begging you to buy, you know they're having problems moving inventory. So remember, all these companies, they build product that most of them have a 1-year waiting list. When that 1-year waiting list ends and people get the new rates, they overbuild and then they have to discount their product. Guys, you watch these two things right here and it will tell you when the avalanche is starting to crumble. It always starts at the top and works its way down. So look for those two. I'm going to give you a double shot here. I'm here to tell you guys the Airbnb, it's going to be the first bubble in this market. It's just a hunch. I can't guarantee it, but Airbnb are typically vacation homes and people who pay top dollar and push the cash flow to the limit. When those markets start to wind a little bit backwards, there'll be a lot more pressure on cash flow with very high mortgage balances. And these are going to be the first ones to default, in my opinion. There's been a lot of big push on Airbnb in the last 2 to 3 years. And most of these are people, because if I'm getting $150 a day for a property that's meant to be really a single family home, and then suddenly I can't get that $150 or I got to turn it into a regular rental, it drastically alters the cap rate for that property, or what we call the return on investment. I see so many people Airbnb, they're like, well, it's bringing in $8,000 a month, so we can pay $700,000 for the property. You better make sure that holds true through the whole time. Airbnb is untested in these waters. And I think Airbnb is going to get caught up in that high end and start to have a catapult effect on it. It's my prediction. I can't guarantee it, but most of the people that I've sold property Airbnb, they all overpaid for them based on the current cash flow. So if people stop spending money on those things and they got to turn them back into regular rentals or even discount them 20, 30%, it could be a huge negative on their business. So keep an eye on that. And then last but not least, single family residential inventory will increase gradually by the fall of 2022. And I'm telling you, this is a fact. We're in a seller's market. The shift hasn't quite happened, but remember, the lower end houses are going to be the last to feel that effect. So watch the upper end, the Airbnb, the high end, and then watch for those like high end boat and RV sales. They will tell you the way to go with it. Now, the reason single family residential will not have a huge inventory increase until late 2022, my prediction is the fall. Everyone's saying the summer, but I think it's the fall, is you got everybody running out trying to lock up a mortgage rate right now. So right now, let's just say we're in spring. From spring to summer, there's an artificial demand being created, and it's being created by the Fed. So everybody's going out and trying to lock up their rates because they're like, okay, well, let me get in at just below 5%. What does that do to inventory? It just puts more and more pressure on it. So like right now, I think we got 4 or 5 houses on the market. It's like whatever number we put on it, it's just a bid war. And then we have to forecast what we think it's going to appraise for, because in the end, that's the most someone's going to pay for is what it's going to appraise for. Because there's a huge interest rate spike most likely going to happen in the June Fed meeting by a half a point. You're going to see a mad dash between now and June for people to fight for these single family homes. I'm telling you, I see it right now. So everyone's like, I don't know what you're talking about. Rates are going up, but things are going well. It's because everyone's trying to lock in their rates at 5% or low or below. So the real question to you is, Rick, where do you think rates are going to go, and how do you think it's going to affect our wholesaling business? Remember, wholesaling, I could care less what's going on with the market. Like, I don't care. I just look for deep discounted properties that I can move. So if it's going up or down, I've made money both sides. You have to fix some of your focal points. So here's a wild prediction, but I really see it happening, is there is going to be high competition for those medium price range single family houses and below, because they are the new affordable living. Okay. When people used to pay $100,000 for a house, now like the median price is probably $225,000, $250,000. And there's going to be a lot of pressure on those homes because there's not going to be as many available. So honestly, in the foreseeable future, your median price homes and below in normal markets, they're always going to keep busy. So my prediction is you're not going to see a huge price drop in like the median price houses and below. It's not going to happen, guys. There's too many people chasing them, too many things at play. So here's what we have to consider, guys. These are the wild cards for the 2022 year. These are the things that I don't quite know exactly where they're going. And you and me both have to sit here as a student and figure out which way it's going to go. So a third of single family homes being bought right now are being sucked up by Wall Street. Okay. What do I mean by Wall Street? These hedge funds go out, they contract your properties, they buy them, and they put them in a big pool, and they put a fund together. It's basically like a REIT. Why are they pushing so much money here? I don't have the exact answer for that, and I'm trying to do as much research on it, but Wall Street is taking up 33% of the inventory, okay? So a third of it's already off the shelf. And that's what's had a huge impact on what's going on in today's market. You know why I'm selling the hedge funds all the time? You guys are too. The downside is they just keep taking more and more inventory off the market. If they stop buying, this game's going to change really quick. Are they going to stop buying? I don't know. That they might be in this for the long haul. I'm being told they're in it for the long haul, but time will tell. Okay. The pace of inflation. We're at a number no one's ever said. The United States government tells us it's 7%. I think it's at least double that. I don't even think we're close to it. And guys, keep in mind, the price of fuel, everything, it's going to spread across everyone. The haircut, I'm paying more for a haircut. Remember, employees got to pay more to get to work now. They're going to demand higher wages. This never stops. Transportation of food, it's endless. And if inflation is not, if it's not put under check by the end of 2022, all the cards are off the table. I'm just telling you, guys, keep in mind, if your property appreciates 12%, but inflation's 15%, you're losing equity in your deal. So I want inflation under control. I just wish the Fed would have a more balanced policy. It's such a reactionary thing. It's kind of ridiculous because understanding when you print the money and do all these stimulus, like, you know what's going to happen. Like I don't need, like, I'm not even an economist. I could have told you inflation was definitely going to happen. There's just too much money chasing too little of goods. Okay. So the Fed's interest rate, according to the minutes of the Fed meeting, 7 increases. If you go at a 0.25 basis, which is the minimum they do, by the end of the year, that would put us at 6.75 for your average 30-year mortgage. If they do more aggressive ones, it could be as high as 7.5. I think it'll stay below 8, but somewhere between 6.5 and 7.9 is where the rate's going to end up in the long run. And I'm hoping that's enough to counteract and get the Fed's goal is to get inflation down to 2%. Dude, it says we're at 7. I think we're at 14, 15, but I guess you can manipulate the numbers however you want. So they're trying to target 2. So if you keep seeing inflation at 7, 8, 9, or a double-digit number, these rates right here, they're going to go through the roof. Okay. We do not want to get near 9 or 10%. No one's going to be able to afford a house. I can almost guarantee you a pretty large market correction if that happens. Now, I'm here to tell you 6 and 7% is not that big of a deal in the long run. It would probably represent a balanced economy, but we're going to let people kind of make that decision and see if that holds true on that. Also, supply chain. Is this thing ever going to balance out? Are we ever going to get back to normal levels? I don't know. Here we are. We're a year outside the worst part of the pandemic, and we have more issues now than I think we did when we were in it. So I never predicted a lot of this stuff happening, and this is what's just creating chaos. Okay? And not to throw this in, if you guys didn't know, there's a war going on. And this war has got people's attention. And I'm not here to get in the politics of the war, but war is not good for global economies. So nobody wants to see anybody suffer. I'm not here to talk about the war. I'm just telling you, whenever you have a war, it weighs in on the economy and you got to pay attention to it. If the war ends quickly, there's more optimism and the market could recover quicker. And then maybe we don't have the interest rate spikes, or the war could drag on forever. I could say the same thing about supply chain. Does this drag on 5 years, or do we correct this by fall of 2022? And last one, do Wall Street buyers, do they keep buying, or they decide, the economy is so rough, I don't want to buy anymore? Of these 4 wild cards I'm throwing up on there, these are the ones that are the variables that are constantly having everybody guessing. And by the way, if you haven't figured out, Zillow made a forecast for this year. You ready for this? They're estimating 17.8% in price appreciation for through 2023 through February. To add insult to injury, CoreLogic predicted a 3 to 6% price appreciation for 2022. Now, are they right? I have no idea. Here's what I'm here to tell you. Both these companies over the last 2 years have been so wrong on their predictions. It's horrendous. They were off by like 5 times. They were 5 times in the negative wrong. So I've learned to look at these predictions, and I want you guys to understand, it's just my prediction is nobody's got a crystal ball. Like this stuff I do not control. I don't control Wall Street, how fast inflation goes, how fast the Fed raised the rate, and obviously a war. A war, it doesn't help us. It's a distraction. And honestly, the sooner we can get that done and get back to normal, the better off. If that war drags on 4 or 5 years, it's going to have huge implications in the United States, because the longer it goes, the more unease the world is at. So, guys, that is it. That's my presentation on it. It's the absolute truth on this. I find that most people, when they do these, oh, market's going to crash, it's all about the thumbnail to get the effect. The truth of the matter is, they keep guessing, and when they get it wrong, they just reforecast till they get it right, and then that's the one they play. So you guys have me on file here. I'll put it on here, and I'll go back at the end of the year and we'll review this. And I'll tell you where I was right and was wrong. I promise you I'm wrong on some of my stuff. I'm just going to tell you. Anybody who says they got it all right, they're just completely full of themselves. I've been doing this 20 years. You never get this all right. Welcome to the business world. So, guys, tell me what you think, what your biggest concerns are with the market. And after that, I am going to open it up to any questions you have relating to wholesaling. We're going to spend the next hour and 20 minutes just getting to know each other, have fun with this. And guys, have fun with this, man. Like, to me, it's like, it's exciting and scary times at the same time. We have never had so many wild card factors in the U.S. economy, particularly in real estate, ever. And I've seen predictions like, you better buy now, because if you think it's expensive now, you're going to be shocked in 2 or 3 years. They could be right. And then the other side says the dollar is going to be worthless, and we're all going to be living on the streets, and we're going to be broke. So you got to take stuff with a grain of salt. Most people make a prediction for their own personal gain. So since I don't have anything to sell you, honestly, I'm just going to tell you what I believe is the truth. And then you can decipher from the information there. But don't take my word for it. Go out and verify some of the information. So what's up, John? John just received his pre-foreclosure and probate leads. That's awesome. He says, should I send your probate letter? Yeah, but try to put your own personal spin on it. So what's up, Michelle? I always appreciate you being here. She is a diehard. I appreciate it. Rick's in Knoxville. Smith Financial Relief Group in the house. Awesome. Olivia's in Washington. So I love you guys put the notes, because then I kind of get to know what markets you're in. So it kind of makes it a little bit easier when you ask me questions. So, so you guys can answer questions in the comments. I love it because it helps me out. But if you have a direct question with me, Jonathan says, I appreciate all the info. You guys rock. Before finding you, almost joined a guru course. Listen, God bless you for finding us. I'm tired of we just don't talk about gurus anymore, because I'm not in that business. So I'm not going to acknowledge it. There is a certain percentage of people that will benefit from a paid direction, and I'm all for it. But the reality is, there's a lot of people out there teaching wholesaling real estate, and they do very little of it themselves. Actually, probably none. And for that reason, most of them have been teaching since 2013. And just do your homework on who you're working with. Make sure they're credible, and make sure you know what you're getting into. How many students? How long does the course go for? How do I communicate to you, and stuff like that? Or just join us Thursday night. We just answer your questions live for free. So, what's up, Jose? Okay, awesome. We got through all the hellos. Masood. Somebody wants to add somebody to a buyer's list. You guys know how the buyer's list works. It's the best way to do reverse engineering on finding someone's virtual market. Restores recognized my tattoo. So I only got one tattoo, guys. I waited till I was 50 to get it too. So awesome. So Kurt, you're in the right place. I appreciate you coming here. So Kurt, do me a favor. If you're new here, just go to freewholesaling.com, and that'll get you started. So I got LA in the house. I got Indianapolis. What's up, MJ Smooth? Everybody knows Eskimo. I'm not even going to put him up here because he's let's put him up here. So he says, a lot of investors say cash flow matters. Don't worry about the market falling. They said hold and buy so much more like you creative finance deals. Well, the problem is they don't know what the future holds. So cash flow works as long as you're cash flowing. But the key is here, you have to cash flow from day one. You can't cash flow 5 years later unless you're going to do an extremely high-end property and you know what you're getting into. That's a whole different ball game. So, guys, I've owned creative finance deals back in 05, 06, and 3 years later, I had to give them back to the seller. It was so upset. Like, I took a lot of the strategies that are being taught today. I just went and contracted everything and took over sub two. And I find out hurricanes hit, floods happen, economies melt down, people stop paying their mortgages, people stop paying their rents. So many things can happen. So the best way to protect yourself is make sure you cash flow from day one and you have enough room to cash flow every month and you have an exit strategy. So good point, Eskimo. So Kayla says, would you compare this crash to more of the crash in the 70s or 08? Here's the problem, Kayla. This is crash that's extremely different. They're nothing like either one. The 07, 08 crash was completely based on what I call fraudulent mortgages. And that was Wall Street's way of trying to push money into the market. The problem is they were writing bogus loans. Anybody could get the loan and nobody was on the hook. And everything was good until the market had a correction. Okay. And so many houses are going default because people are like, I can't find a renter. Market rates rents have dropped. I'm just going to walk away from it. Well, like a third of mortgages were like that. It was really bad. So maybe this is just my idea and I'm just brainstorming here. You guys let me know your opinion. Maybe that same Wall Street money that was trying to push those risky mortgages, maybe they're the same people trying to drive the purchase of single family homes and just do a different strategy on that money. Because we've got to remember, real estate is a great asset and banks love the loan on it. So if somebody's got a portfolio of 1,000 houses, they can go out and get, probably $1 billion loan on it. I don't even know what the number is. And they're just doing it reverse from that way like that. There's a lot of people, some of the extreme conspiracy theories, I don't even know if you would call it that, is that the government's trying to take over all housing so they control everything. That's a little far-fetched, but a third of the housing is being taken away, and that's stuff that you guys can't compete with anymore. And we all struggle to get those. So Roadless Travel says hedge funds and iBuyers are getting in the way of the overhead, contributing to the even higher appreciation. I agree. They're buying on speculation. When their investors don't get their role, it'll be bad. So the question is, if the cash flow rolls back and Wall Street's not getting the returns on this, what happens to all these assets? And that's going to be the really interesting thing. But I feel like if they control a certain part of the market, they're going to be able to control the rent rates. And I think that's part of what they're doing. Once again, that's only 20 years of my experience just guessing on it, but we've never seen this. Justin says inflation is tough. Dude, we've never seen inflation just shoot up like this. So it's usually a gradual thing. So the problem is the Federal Reserve is in such a reactionary position. So if you guys follow the stock market, it watches everything the Fed says. They analyze their minutes to death. It's like exhausting. And people are very reactive. I want you to understand real estate is not like the stock market. It's a much slower progression, but it always happens. So when a stock market melts, so back in, what was it? 08, 07, 08, when the market just melted, it was bad. Okay. Real estate started sliding off the cliff, but it took 6 months for people to go, oh my gosh, we might have a problem. And then it was another 12 months till we really saw like an end to the bottom. Nobody could find, it was like catching a falling knife that's super sharp. And I'm here to tell you that I don't think that's going to happen. I don't, but the real estate's going to have some sort of reactionary effect on the market. So it never happens overnight. So if you had an instant stock market crash, it would translate into real estate over the next 6 to 18 months. That's how it takes it. In 08, Like real estate, 07, 08, real estate took 18 months to really start like getting depressed prices. And then that's when the media started covering it. It just festered and it got worse and worse. So from 2008 to 2010, it was a falling knife that you couldn't catch. And once you found some bottom, 2010 to 11, people started buying again. And then 2013, the market just started going crazy again. So it's just to let you know, that was a 4 or 5 year journey. And I'm here to tell you, this real estate thing is going to take time. I've never seen an instant knee jerk reaction. Where is that? To real estate. I've never seen it just drop overnight. It just doesn't work that way. But I will tell you, I think June's going to be one of the telling signs, because if they do a 50-point rate increase, it's going to get interesting. It's going to get really interesting. You guys understand the cost of money costs a lot more then. And these costs don't go away. They roll up in all the goods, all the products within a house, the wood, the raw materials, everything, the countertops, everything costs more. I went to price out granite counters for a higher end property we're doing, double the price. Double the price. I was there 4 months ago. It's doubled the price. Okay, but my government's only telling me there's a 7% increase in inflation. Absolutely not. So, okay. I got Brandon here. What's up, Brandon? I'm not sure which market you're in, but you'll let us know. After watching your probate videos, I made a list and decided to warm call. So I like that Brandon's listening, because warm call is a psychology builder for you guys. If you haven't figured this out yet, you're so used to cold calling. If you have the mentality of doing a warm call means you're going to be a warm, inviting individual, and understanding you're going to have empathy when you call someone in this position, because you feel for people with that position. And if ever happens to you, you would expect the same courtesy. So very good. The first PR I called picked up and immediately wanted to sell. I have an appointment tomorrow to meet with them. Thank you so much, Rick. So by Brandon taking action and just having confidence in himself and taking my guidance and advice, something amazing's happened in his life. Now, Brandon, just understand, even if that doesn't work out and you got to make $300 more calls, the system works. It just, you don't know who's going to say yes. Now, if you're one of those lucky people that just started wholesaling and you called the first or second person, they said, yeah, I'll sell you my house or you can just come take it. God bless you. But I'm telling you, that's not the reality of this business. So Brandon, take advantage of it. Go through and study everything you can on the freewholesaling.com, and you will do amazing with it. Just be confident. And remember, 2 ears, 1 mouth. And I'm usually doing 5 to 6 touches before I'm writing a contract on that. So that's it. So, and if you guys go, oh, what's he talking about on these probates? Either go to the probates and pick them out yourself, go to listrei.com and do the pre-probate section. I'm telling you guys, if you're not doing probates, you are missing a huge lead source. They are the most profitable deals in my business. And I've talked to everybody across the country. Everybody agrees. If you're not doing probate, you're missing out. So Eskimo says money's not even real after 970. He's right. They took it off the gold. I think it was 69, but 70 is close enough. So that works. Where they want to own. Okay. Will they increase again? Okay. You guys are answering your own words. SKF says propping up the stock market. Dude, stock market's a hard one right now, because I like to buy stocks based on value. And when you're getting 20 times like earnings and stuff, like the numbers are just like, we just don't evaluate it the same way we do anymore. It's like the world has changed in that part of it. Derek says, no. They fell asleep at the wheel. No. They just wrote checks. Yeah, I think they fell asleep at the wheel and opened up the checkbook. That's the problem with our government. So I'm not here to discuss the government, because we're all individual thinkers here, and I don't subscribe to the victim mentality. So on that subject matter, why I'm here, okay, because this is Rick's Friday evening. I don't have Zach here to keep me in check. So Zach's probably like, oh my God, he's probably on his way driving over here right now to unplug the internet connection. I think the biggest problem we have in America right now, you ready for this? And this is a wholesaler telling you, is just the lack of accountability. Everything is everybody else's fault and nobody's accountable. And when you blame the finger at someone else, it's so easy to be the victim, right? So if you're at fault, I can blame you for it, and then I can scold you for it, and then I justify my narrative. And I see this going on in all parts of the world, and it just drives me. I know I can't fix it, but I will tell you, I fix it in my family because we are accountable for everything we do. At the end of the day, if we make a mistake, we own up to it, we fix it, and we try to find solutions so we don't have it happen again. Instead of just saying, I don't know how I got like this. I can tell you exactly how you got that. You ate like 9 bags of potato chips and you've been doing it for the last 5 years. If it's financial, if it's physical, if it's spiritual, I don't care what it is we all have to find a way to be accountable, because I promise you, everybody else wants you to be accountable. Nobody's accountable anymore. And it starts with every part of our life. Every time I go out, like between selling houses, working in the businesses, just like I see people all the time. I don't know how I got this way. I can tell you exactly how you got that way. You just don't want to take accountability for it. So, and here's the other one, dude. Stop judging yourselves. You guys are the worst at it. You're talking about the worst guy about here. Stop judging yourself, because I promise you, everybody else is so busy doing it for you. You don't even have to worry about that. If we just be accountable for all our actions and we would stop judging others, so many things would happen. I'm judged all the time. Oh, Rick's gives out free wholesaling. That's not fair. Why is that not fair? I don't understand. Why? It's a benefit. I'm helping everybody out on the stream. I'm donating my time. Yeah. Well, okay. I get affiliate links. Who cares? I promote products that I pay for in my business, and I say it works. It's helped me become a millionaire 10 times over. Why would I recommend it to you? And guess what? Since you guys don't pay me a coaching fee, you're happy to do that, because I'll show you how we use it in our business, and we'll give you examples every day. So I'm okay with that. I know everybody's okay on the stream, but I can tell you a lot of people outside of this, they can't stand it, because I'm not teaching wholesaling like I was taught 20 years ago. The world has changed, guys. So if you guys want to get access to those lists, go to listrei.com. I just picked up 2 monster deals off of a high equity list for my market. I've been doing this market 20 years now, and it still works. Is it saturated? Yeah, but I don't care. I just don't care. Don't forget. Yeah, I'm not going to put that up there, but I agree with it. So BAPOS, where can you watch the high-end data every morning? So you can't watch the high-end data every morning. The data you can watch every morning is obviously the stock market. You can track the Fed rate. You can also track housing inventory, although it's on a 30-day through your National Association of Realtors, which you know how I feel about them. But remember, that's always lagging like 3 months behind. So what you try to do is keep your pulse on the data. And there's 3 million outlets to do it. The easiest way to do it on the internet, just skip the TV, because you get the drama with it. You don't need the drama. You just need the stats. Okay. You just need data, and you can look at data, and you're smart enough. If you're watching this, is it going up or is it going down? You need to be hyper focused on inflation and the Fed rate. I'm telling you, man, something has to give. I don't know what it's going to do. What if inflation just keeps going up double-digit numbers? What are we going to do? If they do that, the Fed's forced to push mortgage rates to get, if it just kept creeping up, then we risk running double-digit mortgage rates. All bets are off when those numbers come up, because it will affect absolutely everything. So Justin says, why Airbnb? Here's the reason, because Airbnb is not bought on traditional market terms. So when I buy investment property, I go, okay, that rents for, say, $1,000 a month, and maybe I have 2 months of vacancy. So I'll generate $10,000 on that property, minus off tax and interest. Maybe it generates $7,000 total. I then divide that by the sales price, and that's my return on it. That's how traditional real estate is exchanged, other than people buying their personal houses. Along comes Airbnb. By the way, brilliant business model. I got no problem with it. I actually take advantage of it. The problem is I'm seeing like people are renting out rooms in houses and calling it Airbnb. It's completely out of control, in my opinion. And so I can sell you a house and go, okay, listen, I've got this 3 2 bedroom house, but I tell you what, you can rent this bedroom out for $100 a day. So what happens? Johnny on the spot goes, wow, $100 a day, 3 bedrooms. Let's do some math here. Ready? But this is how it's sold to you. So I can earn $300 a day and 30 days in a month. I earn $9,000 a month on that house. Oh my God. I'm going to earn like 80 grand a year. Oh, and the house is only $250,000. Okay. Good luck with that one. First of all, the house was never designed for Airbnb. A lot of houses you guys are being sold aren't set up for Airbnb at all. I've built an Airbnb place. We build it for Airbnb, meaning high turnover, very durable items, not regular kitchens, not regular walls. There's certain stuff we cement and glue down, and we make sure like the drapes, any of the window treatments are high level commercial stuff because they get abused. And I want to make sure I can turn that house around really quickly. Now, take an average house you buy that's run down through a wholesaler and you turn it into an Airbnb. They usually get run down. They get beat up really bad, especially like the beachfront and all that other stuff. And with the cost of all the repairs today, you guys do the numbers. Oh, but Rick, I'll just raise the rents. You won't if interest rates hit like 9-10%. That's going to be a tough one because the whole economy is going to feel it and they're going to peel back. So I normally would get $1,000 for that rental, but Airbnb lets me push the number to the 9,000. So you get that, Justin? So Airbnb is basically doubling, if not tripling, the current net operating income of a property. Now, some of them are fit for it. I like ones that are near the water, on the water, oceanfront, or have a dock. They make sense for Airbnb. But now you guys are talking about like little condos. Guys, just go on Airbnb and just do a search. It's unbelievable what's for rent on there. And all these people are being pressured because they overpaid for the property to get these insane rents. If I'm a guessing guy, I got to assume those are the ones that are going to be hit first because people are going to spend less and less money if they don't have the money available to them. Remember, as the Fed raises the rates, money becomes tighter and tighter, and it's hard to get money working for you. So that's why I think Airbnb is at risk. I don't guarantee it, but we'll see. But you guys got to understand, in the last 3 years, we've seen the biggest push for Airbnb in history. Somebody put a comment on here and let me know how long Airbnb's been around. But I don't think it's been around like maybe 10, 15 years. But really, it's come to market in the last 3 to 5 years real heavily to the point where realtors target Airbnb and they understand how to do it. So awesome. Okay, let's see here. So guys, I'm open up to any questions. I got the next hour to answer anything you want to do wholesaling. I don't care, man. Let's just ask the questions. Let's have fun with it. And so Primal says, told my dad to get out of the stock market and I want my dad in the real estate. So let me give you my opinion on like the stock market. You will never, ever, ever, and let me repeat this, never, ever, ever, ever beat the stock market. How do I know this? Because I've been in it a long time. And I'm here to tell you the stock market, you cannot time it. Anyone who tries to sell you a product, a software, or like a system, there's a particular one that starts out there with an F. All you will hear about is like, I made all this money during a trade. Guys, if it was that profitable, large corporations would own the space and they would destroy it. So it's easier to take advantage on selling somebody hope and opportunity and get them into these things. If you think a software can tell you when to buy and sell a stock, you're crazy. It'll offer you data, but you don't have the best way to protect you since the market is either just be in it and just buy more when the stocks go down, or just be out of it. You cannot pull money in and out of the stock market because you can never time it. You have no idea when it's going to go up and down. And that's just, I've done stock market and real estate for a long time. You're better off just to stick in the market. Now, if you're towards the tail end and you're getting ready to cash it all in, then I would probably get out of it. But I'm just telling you, if you think you can get in and out and figure out when the high and the low is, you'll never get it. I've never met anyone who's done it yet. So MJ, absolutely yes. So if you go back and watch the video me and Zach did yesterday, we spent 2 hours talking on this exact method. So go over to Flip with Rick and just pull up the one with how to offer lowball offers. Really good. You'll like it. So appreciate it. Thank you. Let's see here. Wall Street's going. So yeah, that's a good one. It's like, is Wall Street going to cause the next explosion in real estate? It could, because guys, if suddenly a third of the houses stop being sucked up in the market, and keep in mind, the next question is, if Wall Street what if they decide to liquidate the portfolio like the banks did back in like 08 to 10? Oh my God, that was a nightmare. So do you guys know how that worked out? They took 8 years and pulsed the foreclosures in to sell the REOs, which is real estate owned by banks, on the market, because they said if they put everything on the market, it would have caused an 80% crash in real estate prices. So amazing how the government has the ability with Fannie and Freddie loans that, keep in mind, guys, the banks don't own any of these mortgages. They just service them and they process them and they make fees on it. So all the bank ever wants to do is transact on it and service the loan. That's it. All the money is pushed out on the Wall Street one way or the other. So the real reset in Wall Street is now they've gotten, instead of getting into the mortgage business, which they still are slightly, they're heavily into the rental business. So if you see an adjustment on rental rates, it's going to get interesting in everyone's 401ks and stuff like that. I mean, a lot of money. If anybody has any type of numbers they think's invested with Wall Street in the current hedge fund like purchases, and this has really been going on for probably 2.5 years, even borderline 3 years, because I was dealing with it before the pandemic. So Joshua's got a good opinion here. He says, just let it all burn. I agree to a point. So if you think the world's coming to an end, the only thing I ask you is, you have got to get yourself in a position to set aside 6 to 12 months of living expenses so you can ride the wave out too. Because then you can buy like crazy. Because remember, when the market's tumbling, it's like catching a sharp knife. Nobody wants to catch it till it hits the ground. Because you don't know when it is. And that's the biggest problem when going on the downside. That's the only issue you'll ever have in wholesaling when the market drops off. I'm here to tell you, I don't think that's going to happen. So if you're just tuning in, go back to the beginning of this video. I kind of make my predictions, how we got here, where we are, and where we're going. And I want you to kind of make the decision of where we're going to go. But there's a lot of wild cards, guys. There's so many wild cards factored in here. So I appreciate it, Jose. I'm just here to tell you, man, I've watched. Now, here's the one thing I have over most. I've been through multiple market cycles. I've been through extreme market cycles. And this one has completely different dynamics at play. I've never seen. We have so many record stuff, guys. You're going to look back on these moments and go, oh my God, I was in the market in 2020 to 2023. It was a wild ride. We are just starting to tip our hands on the backside of higher interest rates, and when those bills come due, and it's going to get really, really interesting. So here's one thing I've learned. If you feel the market's dropping down and you think there's going to be a huge correction, which I've already told you, I only think it's going to be in sectors. Okay. There's not just wide. In 08 to 10, it was across the board. Anything that had real estate in it, it got crushed. Okay. So if you really think it's going to bottom out, and it's possibly could, you want to go cash heavy. And everyone's like, well, cash is trash. I agree, but cash gives you opportunity. And if you have opportunity and people are desperate to sell, amazing deals can happen. Okay. I bought a $3 million house for under $300,000 in 2010. A $3 million house. It was a short sale. Now I did a lot of things wrong with it, but I still made a ton of money. And I'm here to tell you, only because I had my coffers loaded and I had my money ready to go was I able to take that deal down. And it took 4 months to get it done. Only during that time could I have bought that property. It's been sold 2 or 3 times for a much, much higher price. And I honestly, I wish I held on to it, but I wasn't prepared at the time. So Oh man. So uh I'll let you guys go down some of these roads here. So here's a good point. So Zillow is in the house buying game. You guys know they've quit. Um, of course, they had to predict a ridiculous appreciation in their favors. That's a damn good. That's a really good point. So when Zillow was in the house buying business, which I had to compete with them here locally in Port St. Lucie, is they made a prediction of an almost an 18% appreciation for this year. You guys, I mean, it could happen. Like I'm not like right now, unfortunately, we are on pace for that. But I think there's a lot of factors that is going to push that number way, way, way down. What you guys got to be watching for, especially if you're going to do any type of long-term holding, is your appreciation going to outpace inflation, or is inflation going to outpace your appreciation? I don't know the answer to that, and we're all going to get the answer really, really soon. Um, so Nathan says, so it's going to be harder to wholesale in the lower income communities or the middle class areas. So good news, bad news. Here's the good news. You're going to have significantly less competition from wholesalers because they're going to give up. So many people think this is fast money. It's really easy. And the reality is it is work. And if you apply yourself and you get consistent through your disciplines, you will do amazing as a wholesaler. Unfortunately, as I talked about earlier, a lot of people don't want to be accountable for anything. So they get in this business, they don't make big money right away, they just quit. And then they move on to Forex. And then they move on to Amazon drop shipping. And then they move on to another MLM. And you guys all know people like this. If you just stick to one thing, guys, you'll do amazing things. I got out of real estate once and it cost me over $1 million. And I never looked back and I'll never make that mistake again. So I tried to buying a business I had no business being in. And I thought I could do that and do my real estate. Well, it took away from my real estate and I just walked away from it. Like I just moved on. I took a huge loss. But honestly, it was the best thing I ever did. And I think it was God teaching me a lesson. And I'm trying to have you learn from my mistakes so you guys don't have to make the same mistake. So I appreciate it, Cayenne. The Godfather. It's funny. I don't really want that nickname, but it actually that's really good. So um appreciate you guys. So Primal says we know it will crash. Listen, Brian, I'm telling you, I think the market's going to crash in sectors, and when I say crash, I'm talking a 10 to 20% pullback, which is minor. Back in 08 to 10, we saw markets 70, 75%. I was in Port St. Lucie was one of the hardest hit markets in the entire country. I was buying houses that were $240,000 for $30,000 and $40,000. It's absolutely nuts. So, did I ever predict that happening? Absolutely not, man. I owned almost 30 houses when the market crashed, guys. So I had to make huge adjustments, and the sooner I could rip the Band-Aid off, the better. So, let me go back to. Sorry about that, Nathan. So the good news is there's going to be much less wholesalers doing what we do. You guys aren't going to have near the competition. I promise you. When the market starts to have hiccups, wholesalers in general, they're like when you turn on the lights and you have like a cockroach infested like room, they all scurry. They just get, it's too hard to get out of here. This is too tough. And that's what we want. Those are what we call saturated markets. And saturation is always temporary. Competition is somewhat permanent. So the good news is you got much less competition. The bad news is there will be realtors chasing the lower end prices houses because they can't afford um, the higher end stuff. So I also predict we're going to have quite a gap between very wealthy people, nice houses, and then just basic houses. A lot of the houses in the middle are going to be considered like the low income houses. And for that reason, you're going to see a huge separation. I think we're getting rid of the middle class anyways, the way the US economy is being set up. So there's going to be people like 300,000 houses below, and then everybody else is going to have like a mill and a half. There's going to be a huge separation. It has to, guys, because that's the way the economy is rolling right now. I didn't make this stuff up. I'm just making observations of like what's going on. So, um, okay. So I got somebody on Facebook says, when getting probate records down at the courthouse, is it next to do the records from the last 3 months? I prefer you do the most current records you can get for that month and start there. In the old days, I used to go back and get, like, I thought it was super efficient. Like, I was like, oh, Rick, he's so smart. He's smarter than everyone else. I go get 6 months of probate. I'd mail to him. Like, I only got to do this like once every 3 months. Didn't work. When I started doing, I would go and get like 8 or 9 probates and I'd mail to him instantly and I'd get a response. Now, if you want to warm call them, it's even better. So I'm just telling you, the sooner you can get the data in probates, the better you'll do. Speed kills in probate. I know it's a terrible analogy, but it's actually true. So good question. Love it. So Justin says, so that if the table churns, we churn into a buyer's market, you'll have to put more time into finding buyers. Yes and no. You'll just have to cater to buyers more. You'll have to be more attentive to their needs because they have a lot to pick from. But you're still gonna have to focus on sellers because of that huge gap. We're gonna talk about like $1 million plus homes and then 300,000. That's a $700,000 gap, meaning our pool of houses to buy from will probably be a little bit smaller. But there should be less competition. We'll see how it all plays out. I mean, the cost of housing has gotten ridiculous. So, Barry says, never let a crisis go to waste. I agree. So he says, how can I get your probate letter? I just did, last week I did an entire show on probate letters. So what I would do is, actually, let me check here. I believe I have it. Let me see if I have it, if I saved it. I gave away my letter last week and I know we had a link for it and I don't see it. But I tell you what, if you just go into our YouTube channel, Flip with Rick, and research probate letter, and there should be a link below it, and that should help you out with everything you need there. So if you guys are new to the channel and you want to check it out, you want to learn anything about how I do mailing, I have a course in there, mailingmastery.com. It's 100% free. There's no charge, but it will answer every question you have about direct mail. And go ahead and take advantage of that. So Darwin's got a question. Hey, Rick, I have a question about foreclosures. Should I reach out to owners who have set a date for property sale, but it's about 2 months away? So if you go through some of my videos on pre-foreclosures and foreclosures, the ones closest to the sale date are probably the most difficult ones to deal with. Why? Because they procrastinated all the way to the end, and then they're looking for a miracle for you to save them. When a house is scheduled to go to sale, that means they have a judgment against them. The bank's proven their case beyond a reasonable doubt that they owe the mortgage and they're in default. So the most likely they probably never answered the case. So now they're getting a sheriff knocking on the door saying, listen, you guys got to be out by this date. Guess what? They call, you know why? Because they call me too. And they're calling you, and she, and they're going to call grandma and grandpa. Have you ever been desperate in a situation and you're like, your wife and kids are looking at like, dude, you need to save this house. And you get a letter from a guy who says, listen, I save people from foreclosure. That's why they're reaching out and doing it to you. With anything within 30 days of the sale date, you typically need a lawyer's action to file a motion. And typically they're asking the seller to file for bankruptcy. And I don't get involved in that part of it because I don't really believe in doing any of that stuff. Either you're qualified for bankruptcy or not. But if you can connect with them in the very beginning, or at least a few months way before the sale, you'll do well. Because the procrastination builds, and like they never come to the realization that I need to get out of this house. It's not going to work. So if there's equity left in it, buy it and you can get it done. And then plus you're under the stress of getting it done because once that auction does, it's like you're stuck. So hopefully there's equity in the house. And if there is, you can make it happen. 2 months is not the end of the world. 30 days, really challenging. 30 days is terrible. So 2 months, you got a shot, but you better move fast. You probably should get off this live and go talk to them right away. So let's see. The best way to get divorce leads is just go to your county records, period. Like, so either you got to get them in person or you get them online. Um, so Katie says, would you change your pitch in this type of market today? No. So let me explain the logic. So we've talked about where the market, how we got here, where we are, and where we're headed. So let's talk about sellers. Here's the challenge with sellers. Sellers, oh God, I'm going to put this nicely. I don't want to get in trouble here. Sellers are regular people, and regular people do what the masses do. Okay. So what do most people do? They go to work 9 to 5. They talk about everything that's going on. They talk about how crazy the housing market is, right? Like I can't go one day without someone go, can you believe the real estate market is absolutely nuts? Okay. I've been on the flip side of the conversation. You realize how bad the real estate market is? It's just terrible. Now I've learned bad news travels faster than good news. You ever notice that? Oh my God, she did what? Like people are like people love the gossip. So I was one of these people too. Don't get me wrong. So you go to work 9 to 5, you bitch about the housing market, the cost of inflation, everything. And then you come home. What do? You turn on the news. What's the news say? Real estate's out of control. Prices are record levels. So guess what? Hey, honey, I was thinking about selling the house. I mean, we've got so much equity in it. We could sell this and then go live there and make so much more money. And this goes on every day until this mentality shifts in the regular seller, which the regular American, you can't change your tune. So I do a lot of direct mail. I don't hide it from anyone. I love it. If you guys haven't do it, go to mailingmastery.com. I teach you exactly how to do it. 100% free. I got nothing to sell you there. When I do mail right now, it's you got to understand they all think they don't care if the market's getting ready to tip or now. They just look, hey, the market's good right now. By the time the market shifts, if it does, there's no guarantee. By the time they do it, honestly, it will take them 1 year before any bad news gets back to the market and gets back to regular sellers. Okay? Here's the narrative realtors, and they change their tune. So here's the narrative I hear in every realtor's pitch. You need to sell. I sell now. You're at the top of the market. It'll never be better than it is today, right? Now, on the flip side, if I'm buying from a realtor, what's the narrative? You better buy now because rates are going up, and I don't think you're ever going to. Real estate's never going to be cheaper than it is right now. Which side's right? Which side's wrong? It's how you spin the narrative. The problem is your sellers hear all this, and us as wholesalers have to break the news. Unfortunately, they don't really believe us. They're going to believe the news much more than they believe you. So unfortunately, it takes like 6 months of bad news before sellers even accept it. Now, you people in virtual markets and absentee owners, they're the worst because they're not there. They're not feeling the pain of the property. They're just seeing the paychecks roll in. And until those rents start to roll way down, they will not get the message that the market has softened. And for that thing is, I believe you have to be creative from now until the news gets out. You're going to have to use your own creativity. I don't like scare tactics. I think you just do what you do and you just spend more time building rapport and educating people. And here's the key, guys. Your follow-ups from today till the fall or the end of this year, it's going to be a game changer because you're going to have so many deals. They thought they were going to sell their house for this miracle bombshell price. It ain't going to happen. And these are the people that are going to come back to you and go, okay, what would you offer me now, Rick? I'm like, well, I made you this offer. Let's take a look at the house again and see what we can do. Now, am I not going to buy that house because the knife is falling, the sharp knife's falling fast? If I've got a good buyer's list and I know and I've vetted my buyers and I know what they'll pay for, I'll grab that knife midstream. Okay. But the problem is a lot of people want to wait till they see the knife fall out of the hand, and you're never going to know that. You're not going to be able to catch it midstream. And unfortunately, a lot of you will wait until you think the knife's hit the floor. And sometimes it bounces off the floor and it goes down another flight of stairs. I don't know. So you'll never actually time it, just like you can't time the stock market. In real estate, you just educate yourself. The good thing about wholesaling, it doesn't matter because you're in and out of these properties so fast, it's not a big deal. So let's see here. Sammy asks, how do you determine if a Zillow Fizbo is a good deal? You need to qualify and see if you have a motivated seller. Go to freewholesaling.com and teach you how to do the whole thing. Ask the 4-pillar questions. And if there's no motivation there, I promise you there is no deal there. So what's up, Kurt? I appreciate the emojis there. So guys, by the way, everything we do here is 100% free. I don't charge you anything. I'll never ask you for a credit card. And if you guys could do me a favor and give me some likes, can share this video and share the world with what we're doing here is we're trying to bring wholesaling into the age of 2022, where we share as much information as possible, teach you guys how to get to your first 100,000. In return, we grow the largest channel on planet Earth on wholesaling, and you guys get to learn how to do wholesaling responsibly, ethically, and my favorite part is 100% free from somebody who actually does this business all day, every day. I absolutely love it. I've been doing it 20 years. We run a family-owned business. My son's knee-deep into it. I taught him at 17 how to make his first $100,000 while he was in high school. And honestly, if I can teach that kid, any of you can learn this. So let's keep it going. Zach lets me loose on Friday. I love it. So Olivia asks, when it comes to direct mail, when it's sent back, return to sender, how can I contact the seller? I tried cold calls. Some numbers don't work. So when you get return, as long as you put a return address in the upper left-hand corner, is usually if it gets returned, a lot of times the USPS, which is the United States Postal Service, will put a forwarding address on or a corrected address. Olivia, it's by far not perfect, but a lot of times those individual ones, I'll have my VA Googles it. Plus I have some paid accounts. You just got to find the best way to do it. There's never 100% way to do it. Here's the key, guys. When you get your mail back, make sure you put a return address on it, because you put a name and a return address, it's more likely to be open because people feel like you're a little bit more transparent. Number two, when you get it returned back to you for a forwarding address or anything, by the way, if the person's deceased, they write DEC right on it. I have one missing mail receptacle, one of my favorite ones. Or they'll write on the house VAC, means the house is vacant. So I do enough mail where I constantly have thousands and thousands of leads to be researched. It's exhausting, and in one person's job to do it, but like they always pull out a deal or two out of it every time. So use that information to your advantage. It's far from perfect, but it will definitely work. So, okay, let's keep going here. So what's up, Jonathan? How you doing? He says, going to be joining a wholesale acquisition team to get more experience and confidence. I believe this is what I have to do, but would love to hear your thoughts on it. I go, dude, Jonathan, whatever makes you more confident, I'm all for it. Just make sure you're joining a reputable team. And I don't know if you're just kind of doing like the intern thing. I work for you free to learn the business. Just make sure you define what it is. If it's a mentorship and you're paying them, just make sure you know what the terms are. So anything that gets you closer to your goal, I'm all for. So awesome. Oh my God. You know what, Mark? It's a good question. Volume wise, it's hard to track that. The reality is, like, here's my pitch on this. People will make like these like wild claims, like I have X amount of this and that. Number two, most people are private. No one's going to go, okay, I've got 30 million sitting in the bank or anything like that. It's just, here's what I've learned. The people that brag about their wealth are usually the people that do not have it. How do I know this? People who make like flashy homes, flashy cars. I could do all that, guys. No problem at all. But it's not going to make you a better wholesaler. So why should I focus on it? Okay. If Gary Vee can live off 30,000 a year, what's your excuse? We all live way outside our means, and we have to admit it. Okay. I have learned in my last 10 years to wind it way back, because here's the true definition of wealth. You want to know what it is? It's not the amount of assets you own. It's not the amount of real estate you own. It really becomes between the amount of money you're bringing in on your businesses, whatever it is, even your job, and the amount of money you're spending. The larger that gap, the wealthier you are. Okay. That gap never moves. It never moves. Meaning If you start making, say you made 100 million in 1 year, but you still spent 120 million, you're just as broke as when you were making 30,000. So the true measure of someone is the difference. So I tell people and they go, Rick, how do you become wealthy? Number one, you've got to spend significantly less than you make. And I don't care if you got a regular janitor's job or if you're doing 100 million a year, you have to learn that gap. Okay. So I teach you guys the 20% rule. Nobody wants to hear it, but it's the truth, Mark. You ready for this? If you can live off just 20% of what you earn, you'll be an extremely wealthy person. I could go through every person in your life and show you step by step how true that factor is. Okay. It's just the reality. Well, Rick, that means if I made 100 grand, I have to live off 20 grand. No, it's actually less because you have not taken into account for taxes, all sorts of stuff that come off for it, your healthcare costs, stuff like that. So here's the key is my job is never to limit you. It's to have you earn exponentially. So keep in mind, if you earned $1 million, that means you would live off $200,000. That's a reasonable number, right? So we just need to get you up to $1 million. It's not as hard as you guys think it is. How much have I done so I've done over 1,500 homes guaranteed, like minimum. So I guess I could extrapolate a dollar amount on that. And by the way, I do not make claims of what my students or anything else buy. I don't really do coaching. I've done some coaching in the past, but like it's so easy to say, well, I've bought 5,000 rentals. No, you didn't. Your students did. You didn't. So 1,500 times, I don't know, 250, maybe 250 million. Who cares? Like guys, the key to becoming rich is like, don't spend your money. It's the truth. It doesn't matter. Because if you can learn that discipline now while you're not making a lot, when you do make a lot, you won't change your lifestyle. And for that reason alone, you'll be wealthy. But you have to work on your inner character to do that. I've been through it so many times, guys. Because us as entrepreneurs, when we make a ton of money, it's not a permission slip to go out and spend it. So you have to build it. And then you got to take investments and let them grow with you. And if you guys grow together, amazing things happen. I recently saw a post where people at a mastermind bragging about what their net worth is. The numbers thrown around were so inconceivable. I've been around wholesaling a long time, guys, a long time. I'm here to tell you, the maximum I've ever seen come in the biggest wholesaling operation is 10. I've seen a couple 15, 16 million, but guys, that's gross revenue. You know how this works. There's partners, there's costs, there's overhead, there's rents. I had somebody recently claim at a mastermind, and keep in mind, it was a mastermind, a paid mastermind, a very people that have never been to these events. And I had multiple people. One person claimed to have over $900 million in net worth. And that's where I just go, if you're selling $5,000 masterminds, there's no way you're worth $900 million. It just think about that for a second, guys. Think about that. It's absolutely nuts. Then somebody said they were 600 and somebody said they were 520 million. No verification of anything. It drives me nuts. Guys, don't believe this. That's a hogwash. It's ridiculous. So just drives me nuts. So Larry says, how much does 2 septic tanks and a well add to a vacant lot? I have no freaking idea. If somebody can answer that, help them out because I have no idea. So Nathan says, what's your advice to wholesalers that haven't got a deal yet? What position does that put us in this economy? Honestly, it doesn't put you in any position, Nathan, other than you need to find a way to see what's preventing you from taking action on it. So what I would focus on, what is your action up to this point? Like, what's your activity level? So in a perfect world, Nathan, I would hop over your shoulder when you wake up in the morning and I would see what you do till 8 p.m. at night. And honestly, probably in about 3 hours, I could tell you exactly what your problem is every time. And we all have it. We overanalyze, we look at stuff, or we work Somebody gives us a blueprint and then we decide to look at it through our own lens and then pick the stuff out that we want to do. And that's typically why you're not succeeding at wholesaling. So I would take a step back and look at everything you're doing and just be brutally honest with you. Remember, I told you about like accountability. Accountability is everything. And if you can't be accountable with yourself, I can't do it. Zach can't do it. Nobody on this planet Earth can do it until you can have that honest conversation with yourself. Maybe you're just in the wrong market. I don't know. There's a lot of stuff, but Nathan, jump on Thursday nights. We do live one-on-ones on Wednesday and Thursday, more like Thursday. And I'm happy to help you out. And it's 100% free. So join our mastermind group at Wholesaling Houses for Real and go over there. So, okay, let's see here. So Michelle says, how does the market affect our wholesaling niche markets? Will there be better niches to focus on? Well, here's the thing is, Michelle, if we have some sort of market meltdown, your niches, the ones that are failing, say like Airbnb, will stick out like a frickin' sore thumb. So if that was your dream and your desire to get in the Airbnbs and they drop, then that would be an opportunity for a niche maybe you weren't pursuing. I'm not like a big, here's my theory on Airbnb. If that place doesn't see water or near like a major downtown metropolitan area, like Nashville or like places people really want to visit, in my opinion, it's not an Airbnb. I call them fake Airbnbs. Like, oh, I'll Airbnb. Like I see Airbnbs 20 miles inland and they say, 10-minute ride to the beach. That's not an Airbnb, guys. It's you're just lying to yourself. And if you're buying into that crap, then more power to you. So as the market shifts, the luxury market will become an incredible market for creative financing in the long run. The problem is I don't know how long that's going to play out for. So the niche might be creative financing for like high-end properties, Airbnbs, and I'm giving you opportunities where I think there's going to be some opportunity. But remember, it's all market specific. So it depends on what's happening in your area and your neck of the woods. What happens here in South Florida doesn't mean it's going to happen in California, New York, Nashville, Tennessee. I have no idea. So you have to not only watch all this data on a national stage, you have to find out in your local market. The best way, if you want to get tuned to your local market, is find out where your board of realtors are and get access to their data. All their reports are typically online, and that will give you levels of inventory, average price, median, number of days on market, and the time it's taking to turn over properties. Guys, critical data. And if you're not getting that data, you need to get it now. The downside is it's usually 3 months behind. So it's lagging data. So I use it to support the current data I have and try to find trends. And if you can find these trends, Michelle, that's how you can find niches that nobody else is doing it. That's how all these niches came up. Airbnb became popular because nobody was doing it. Someone goes, you know what? I can push the NOIs on these properties by basically using them as hotels, and then we can drive up the sales prices on these. Here we have it in Airbnb market. That's how it happens. So, guys, it definitely works. It says here, I'm new to the community here, looking for some encouragement. You've come to the right place. Here's why I said, go down below, go to freewholesaling.com, the best place to get you started. As I said, I got nothing to sell you. I've been doing wholesaling for 20 years, guys. I've loved every day of this business, even the bad days. I still love it. I used to work a corporate job for almost 11, 12 years, and I decided I just couldn't take it anymore. And everybody can relate watching this, especially on a Friday evening. I used to go home on weekends and just work all weekend to try to find a solution to get out of what I thought was just a terrible situation. And I was making plenty of money. So I was just miserable. I just felt like I had no control. And at 33, I decided to take a leap of faith and jump into the wholesaling world. And here I am 20 years later, sharing my information with you guys. I've taught my 17-year-old son how to do it while he was in high school wrestling. He made $100,000 in his first 90 days. He went away to college and continued to make incredible money. And I'm happy to say he's back working in my business. He's completely self-sufficient, 100% accountable, and very, very productive within the wholesaling community. And that's how we need to change this world, like one kid at a time. So wholesaling has given me the freedom to spend a ton of time with my kids. My kids, I drive them nuts. I'm not answering that. Why? Because a lot of you, like you, I didn't get a lot of time with my father, and I just felt like when it came my time, I was going to try to make a difference. My heart was always in the right place. I just couldn't figure out the financial part. I did the college, I tried everything, and it didn't work out. So I made a change. I jumped into wholesaling. It's a long story how it happened. It's all over YouTube if you want to find out. But you got to make a change. If you guys are going to depend on corporate America to take care of you, you've got some big wake up calls coming. So the economy is very, very fragile right now, and you need to find a way to take control of your financial situation. Farfetch, look. So if you read Ayo's thing here, it's a little bit long to read. Maybe someone can comment and help out with it, but there's all sorts of theories about like how the global market wants to reset and stuff. I'm not saying I don't have enough time. Like it's hard to explore every theory out there, conspiracy theory or not. You have to take the best information you have available and you have to research it. The problem now is in the old days, the way I was raised, and I'm talking about like us old timers here, you actually used to watch the news, you used to believe it. Like it was, they used to, what's the word for it? It's missing me. They used to have to go out and like verify information. They couldn't lie. And if they lied, they would instantly rectify it and fix it. Today, nobody even checks a story. They just throw it out. You guys see on social media, these videos, they're just thrown out there and they're mostly so that get your attention and likes. You got to start seeing through the stuff that's going on and understand that you are being played. So what I'm trying to do is you have to step and take accountability for your actions, your information. So if you're trying to figure out where the real estate market is, do not let the media tell you where it's going. Go to the source. It's like if I want to go get court leads, I go to the court to get it. I'm not going to the Channel 10 News. I'm not going to CNN. I'm not going to Fox News because one's going to tell me there's leads everywhere and the other one tell me you can never get leads or you're going to go to jail. So you're in a world where you have to decipher your own information. And if you want it spoon-fed and read to you, I promise you someone will lie to you. Guys, it's going on in the wholesaling industry. Let me give you an example. Let me show you how to make a ton of money with no risk, no money return, no risk, and you can sit on a beach with a laptop, you'll make a ton of money. You guys have seen these pitches, but the scary thing is a lot of people buy into it. And I don't know, man. I just think karma is something that comes back and haunts people like that. But this is why we're in the position we're in wholesaling, why we got such a bad rap, because so many people are selling. Like, if you follow my system and do this, in 3 months, I'll show you everything you need to know. I'm here to tell you, learn wholesaling first. It's the art of getting deeply discounted properties. And then you can decide if you want to keep it for a rental, you want to flip it, you want to sign it, and then build your skill sets from then. If you think you're just going to jump in and learn creative financing with no real estate experience at all, I'm here to tell you, like, that's not the way to start. I'm not against creative financing. I love it. I learned creative financing over time because I got exposed to all the situations. If I started out creative financing and skipped wholesaling because I thought wholesaling was tough, you've already failed. Okay. You've got to get through wholesaling first to understand it. And out of your wholesaling deals, plenty of creative finance deals come out of it. So wholesaling, in effect, if you learn how to do it, you're taking creative financing with you. There's so many variables in creative financing that people just won't. There's so many details between contracts, the legalities of it. Did you know that most federally insured mortgages, they're not assumable? Like legally, like it's a question if you can even take them over. I'm not a lawyer. I love creative finance, take it over. But like, honestly, if you got 10 mortgages and you took them over and the government says one day you committed fraud, what are you going to do? You're in big, big trouble. And for that reason, it's completely gray area. I know wholesaling somewhat, but wholesaling is black and white. If the contract's assignable, you can assign it unless your state 100% forbids it. Nobody's ever made a statement on the assignability or the assumption of a mortgage. Okay, and you watch down the road, you guys. Oh, I'm going to do creative financing because wholesaling gets so much regulation. I promise you, it will switch over to creative financing. My prediction is one day you're basically not going to be able to assume a mortgage without the bank's written permission. Obviously, you're going to have the seller's permission. That's never the problem. And I hope that day doesn't come. But the more we keep teaching everyone how to do it, eventually people are going to keep complaining about it. And this is why you get the more people that teach, especially for high-end profit, and keep flipping students, the more we're going to have regulation. Just my 2 cents there. So I love creative financing, but I'm just telling you, to start out creative financing when you don't know anything about real estate, that's a tough one. So I better make sure you got a mentor in for the long haul, and it's somebody you can physically drive your car to and talk to them about a deal. Because I did just like I wouldn't even know how to begin to teach someone that never did real estate creative financing when they don't know anything about real estate. So in the perfect world, I would learn wholesaling first, and then I would just keep adding skill sets to it because wholesaling will always pay the bills for you, and it's 100% legal. So you don't have to take my recommendation. It's just my opinion. So however you want to do it. So now we're talking about, okay. So now we're talking about I have to look this Chronicle thing up. So if anybody's got any information on it, I'm wide open. Let's see here. 3 years, 18,000. Okay. So now this one I know a lot about. So Michelle says, with the coming crash, Kiyosaki is suggesting we stock up on gold and silver, hedge against inflation. So Michelle, I love Kiyosaki. I love the books he's written, but I'm just like here to tell you, he's in the promotion business. He's huge into the coaching platform, and whatever's going to pay him the most, he's going to do. Why do you think he's asking you to own gold and silver? He owns a company that sells gold and silver, and he's the key promotion person for it. He's been pushing gold and silver since 2015. Have you seen gold and silver prices in the last 10 years? You earn zero money. Yeah. So if you did this and hedged, you got killed. If you got out of real estate to get into precious metals in the last 3 to 4 years, you got crushed. Kiyosaki will not come out and admit he's wrong because he's too deep into it. I love the guy. I love his. And by the way, his book is it's all make believe. None of that stuff happened to him. You know that, right? It just made for good writing, and bravo. But the reason Kiyosaki wants you to buy gold and silver, it's because he's selling it, and he's been selling it since 2014, 15. And every year he predicts the market's going to crash. Look it up. Every year it's going to crash, and gold and silver will protect you. By the way, I own plenty of gold and silver. It's done nothing. It's barely gone up in the last 10 years. So it gets little blips, but especially silver, man. Don't even get me in the precious metals because it's completely manipulated. Guys, I invest in everything. I love it, but I'm just telling you, if you switch from real estate to gold and silver on Kiyosaki's recommendation, that man robbed you. Sorry. It's one of the worst investments. Like right now, it doesn't. I just hold on to it because I have it forever. I want you to understand gold and silver is never an investment. It is a hedge. Michelle is correct there. What I mean by hedge, if I had $100,000 in gold and silver and the world came to an end, the idea is I could take that 100,000 and survive in life, or I could take my $100,000 and hopefully get it back through bartering and trading. That's it. I'm not going to make a return on it. If I had $100,000 cash in the account and the dollar went to zero, what do I have? I have zero. I have nothing. So that's where gold and silver will protect you a little bit. There should always be a value there, but I don't know. Go try to take a chunk of gold or silver over to like a local market and see if they'll cash it for food for you. So what's up? We buy houses in the Carolinas. So Alejandro is going to give us a different perspective, and I love this. So it's from Argentina. By the way, I have very, 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 very good friends from Argentina, lifetime friends. So I love the type of people come from Argentina. They're just very authentic, and then they're very loving. So you've already kind of got me in your hands here. Historic inflation is about 35% annual. Last year was about 50%. This only leads to no price parameters and consequently a paralyzed real estate market. I hope you guys could prevent that. So Alejandro's telling you what happens if you do not put inflation in check, the wheels come off the bus because you never know how much money you need to buy anything. Nothing's predictable, and whoever has the most money will always be taken care of, and whoever has the least, they'll get crushed in the market. So Alejandro's kind of looking into a crystal ball. If we don't get it under control in the United States and really the world, then we're going to have problems with that. So I appreciate you sharing that. It's so freaking true. Oh my gosh. Let's see here. Is it true? E says, is it true the petitioner for a summary administration does not have the ability to sign the content and sell the home? So now we're getting into technical terms on probates. So there's a petitioner. And a petitioner is the one that files with the court to appoint a personal representative or an executor. So technically, the petitioner doesn't really have any authority. I'm not a lawyer. It could be a little bit different in your state. The personal representative or the executor has the right to enter into that agreement as long as they're lawfully appointed by the court system. So you are correct. Not the petitioner. You got to focus on the PR or the executor. It depends on which state you are in. So, so Jose is going to ask here, for Florida, do I need to put a return address for letters, or can I use a P.O. box? Lastly, if there isn't any estate, okay, let's start with the first one. Jose, you ideally want to use a return address. A quick fix around that, if you guys find like a local UPS store, you can buy like a legitimate address and have it shipped there. Now, a P.O. box, everybody sees through that. Don't use them. They're not worth it. Nobody likes a P.O. box. Lastly, the age of the internet, you can buy an internet address and just make sure it looks like a legitimate address. And then what happens is you have the right to have the mail forwarded to you, which gets a little expensive, or you can just have the mail scanned to you and sent to your email. That will solve your problems. Lastly, if there isn't an estate listed on PropStream, who should I address it to? The deceased person. Address it to the estate of John Doe and put the property in question's address on there, and the right person should get a hold of that. So that should work out well for you on that. So if you guys want to figure out how to get more lists, especially the pre-probate list, go to listrei.com. It's got a pre-probate option and the filters there, and we use it all the time. It works well. Plus you get 10,000 leads per month with it. So okay, so here's another. Man, you guys' questions are good. So this is what I love. It says, I have a probate property contract that is supposed to close at the end of June. Sounds like you got a little bit of time there. What is your process? Just staying in contact with the seller? Honestly, stay in contact with them. You don't want to get to the point where you're bugging them. But if you're not, so we're in what? Like, shoot, we're in April, first week of April to May. So you got 2 months. So I would probably be reaching out to them every 2 weeks. And then another little cheat sheet to keep people honest and let them know you're engaged is having your title company reach out and just ask them questions here and there. Hey, can I get that payoff letter? Do you still have it? Hey, what's the name of the person, the bank you've been dealing with? Stuff like that. But so many times when we stop communicating, especially when deals need time, they fall apart because your sellers don't think you're paying attention to them. But guess who's paying attention to them? The neighbors, the realtors, other investors. And some people don't care if you have a contract or not. Ask me how I know this. I get people writing contracts over my contracts all the time. And I got to politely remind them, like, that doesn't fly in my wheelhouse. So keep in contact with them. Let me give you an example. I waited once, it was 6 or 9 months, which is typical in a short sale. When I was flipping short sales, this was back in 08 to 2010. That was a big part of what we did. Um, I had an employee, somebody that worked for me, their job was to stay in contact because we used to have 70 or 80 of them going every month and a lot of long time and delay. And we started losing deals left and right because at the end, people just like, oh, I thought you forgot about me. I sold it to somebody else, or like I worked with another buyer. So our policy was to reach out to them every 30 days minimum. I wasn't specific though. So when I said reach out, my assistant at the time, which was the office manager, they would just send him emails. And you guys know nobody reads emails anymore. And we had a deal we were going to make probably one of the biggest profits I would ever made in the history of wholesaling, like in excess of $300,000. And the person never heard from us. We had their phone number. We just got lazy. It's my fault. I take full accountability for it. And they filed for bankruptcy 2 days after we got a letter to short sell the bank. From the bank, we had the buyer all set up. And because we did not contact that seller, we lost out on the deal. Now, I got to be honest, I got a little upset over it. I said some things I probably shouldn't have. And I've learned you need to look in your CRM and make sure you're constantly, the people you have under contract, you're constantly communicating into it. So some people can get away with an email, text work very, very, very well, and then a phone call if it's urgent, and come up with a system that works for you. So I would suggest a minimum of every 2 weeks. When it's closer, make it once a week. So, let's see here. Stocks. Okay. I appreciate it, Olivia. Thank you so much. You guys don't want to do the blame game. If you get anything out of this thing is, I want you to understand, you have to take the KPIs, the metrics you're getting from the market and go verify them yourself. Do not rely on CNN, Fox News, MSNBC, ABC News, any of these, because everything's got to spin. It depends on who owns the company and what angle you're going to get on it, and you got to see through it. So if you enjoy watching Fox News, understanding that's just one side. Not that I really want to go, like nobody wants to watch MSNBC or CNN, but like you got to understand, like how can I watch news with the same story and they both have a different spin? It's just people's opinion or people's agenda. And you have to make a decision what's best for you and your family and not buy into this media like hype. You watch it. I would tell you from 2008 to 2014, the sky was 2013. The sky was on fire in real estate. Run, get rid of it, live in a hut, rent for 4 or 5 years. Okay. They made my job easy. Like negative news makes me a lot of money. Now we have nothing but positive news. I promise you, the minute it starts to turn, you're going to see it everywhere. Unfortunately, it's going to take 6, maybe 12 months to translate finally in our market, and you'll see the change. So for that reason, I would not change how you speak to your customers. I would just get much deeper rapport and make it work. So appreciate it, Primal. That's right. Well, not quite every day, but we're out here a lot. So you guys, you have 2 ways to make a difference in the world, and especially in the wholesaling community. Number 1 is your time. And I appreciate you spending 2 hours with me. I know it's a lot, but hopefully you are getting a biased view from me from a wholesaler. But if you want to be a wholesaler, that's the view you want. And number 2 is I appreciate your time. The other way you guys vote is with your pocketbook. And if you guys are going to go out and buy courses that are subpar with an eighth of the information we offer at freewholesaling.com, that's your choice. But I'm here to tell you, don't let someone tell you because you don't have skin in the game that it can't be good. I've been doing this 20 years. I have over 1,500 homes under my belt. I did 3 this week alone of high profit nature. I'm in this with my 17-year-old son. You guys know how sharp Zach is. I love this business. Okay. And I believe wholesaling should be taught we're in a different world. When I got started in wholesaling 20 years ago, everything was a secret and you had to buy the secret. And I'm here to tell you, there's no more secrets in wholesaling. It's all out there. It's all on the internet. You can go find it. You just need to get it from the right people that are responsible for the information, that are actually active in wholesaling, How many times have you guys seen these big name coaches or these big name companies that teach and then they keep selling, they keep selling, they keep selling, and then all of a sudden there's nothing left in it. And that's the problem with it. Like if you really cared about the product, you would take it all the way to the end. I love wholesaling, dude. I'm never leaving this space. I absolutely love it. And I want to be the voice to help you guys navigate through it. And when somebody tells you a lie, I'm just going to call it to the table as it is. I don't care what people do outside of me and Zach. I believe we're at a completely different level of service. And if you guys will help fulfill that and let people know that there's no more secrets in wholesaling, Rick and Zach told me absolutely no more secrets, then these people are going to have to adjust how they make a living, because that's how times change. People used to hunt whales. We don't hunt whales anymore. So we got to stop hunting for students and start hunting for deals, because that's where the real secret is. And I'm telling you, anyone who tries to tell you a secret, or you go through this long, ridiculous coaching call, I'm just here to tell you, man, I've seen it all. All these guys are sitting in these masterminds trying to find a way to get more money out of your pocket. Honestly, it's so much easier to flip a couple thousand students than try to even do 100 properties. And that's why we have this current issue. Now, keep in mind, I'm friends with a lot of these people. I know them all, but it doesn't mean I agree with everything they're doing, and vice versa. And I'm respectful for them. It's good quality information, but I just don't think it exceeds anything I'm giving you. There's no secrets, guys. I do this every day, 7 days a week. I love this business. I'm never going to use my car, my property, my bank account to show you how good I am. I'm just going to show you, I'm going to show up every day, and I'm going to show you how it's done. And anybody who's ever worked with me knows where I come from. I love this business. I love it with all my heart. And me showing you a fancy car, cars are nothing, dude. Get in the boats. You have no idea what boat costs. Like boats are 10 times the cost of cars. Okay. I like nice pieces of real estate. I'm just not going to go over with you what I own personally. What's the point? What's the point? Me bragging to you, me making millions of dollars is not going to help you. It's just going to like make you feel like, oh my God, Rick's I got to be just like him. And in order to do that, I got to pay his fee to do it. I'm here to tell you, those days are over. It doesn't work like that anymore. Wholesaling is a basic skill set. If I thought it was super complicated, I would charge you for it. I'm here to tell you it's not. They make it seem like it's this crazy skill set that you need years and years of learning. And I'm telling you, in 90 days, you can pick it up. So appreciate it, Primal. Okay, let's see here. So somebody says $100 a day is insane for Airbnb. What you guys got to understand, like I'm looking at Airbnbs because I'm doing a bunch of trips this summer. And do you know more than 80% of the time, the Airbnb is more expensive than the frickin' hotel now? You know why? Because like if I stay in a place for 2 nights or 3 nights, it's usually the minimum. By the way, hotels usually don't have minimums unless it's a busy weekend. Then I have to pay on top of it $175 cleaning fee. On top of the $100 we're talking about on the screen here, it gets ludicrous. Guys, I live in a place where they like 90% of it Airbnb. I'm one of the crazy people. Like I live like I'm on Airbnb every day. I just don't share this lifestyle with you because it's a waste of like, it's not going to help you in wholesaling. But guys, I put in 20 years to get to the position I'm in. I didn't do this overnight, and you will build it up over time too. So back with that, Uber. Do you know most Ubers cost more than a regular taxi now? Uber has the ability to change the rate based on the weather. Taxis don't. It's absolutely absurd. I was in Washington, D.C., and it just started to rain, and they changed my cab fare by almost double. So as brilliant as some of these technologies are, sometimes they work against us, and I hate that part of it. So I agree. You can't time the market. And it's the same thing with real estate. You just got to like figure it out. And you've got in your conviction, you have to look at the data, and you're going to have to make a determination of which way it's going. So if you're in the long haul, it's not as big of a deal, but like with the Airbnbs and the higher end stuff, I would really, really pay attention. So let's see here. So Connor, the strategy doesn't change in an up versus down market. That's the beauty of it. In a down market, you just spend a little bit more time with buyers, And in an up market, you spend more time with sellers. I'm giving you 20 years. I just saved you 20 years of pain in that statement. Efron, anytime you can get the title company set up ahead of time is dynamite. The cash buyer is not so much. Just go to Flip with Rick YouTube channel, and I teach you how to vet your cash buyers. I have a title one on there, which people really, really love, and that's 20 years of experience of probably working with hundreds of title companies. I'll tell you exactly what to say and what to ask. So awesome. Okay, guys, I am wrapping it up. It's around 2 hours here. Come back. We'll be back here Tuesday, Wednesday, Thursday, Friday. We put videos online every day. Guys, go check us out. Check out our Wholesaling for Houses for Real YouTube channel. That's now up and running, and that will be snippets of our Thursday one-on-one masterminds, so it'll be much easier to find. Check out my son's channel, Zach Ginn's channel. He does lots of shorts. He's a lot funnier than I am. And go check out Rick Ginn YouTube channel. I'm getting on there. I'm going to do a bunch of shorts, and we're going to talk like more like these kind of off the cuff talks and just have fun. And the idea is to get you guys know a little bit better, get to know you a little bit better, and you get to know more about me and Zach. And the idea is to grow this community and make it as rewarding for you guys as it is for me. I appreciate your time, guys. I'll see you next week. Go out and have a wonderful weekend and go get a house, guys. I appreciate you. Have a good one. I'll see you guys next week.